Are you constantly told that real wealth is only built by buying expensive blue-chip stocks? What if I told you that some of the most overlooked high-growth opportunities are hiding in plain sight, trading for less than the cost of a fancy coffee? Savvy investors know that true alpha is often found where others aren't looking. Today, I'm sharing 7 disruptive stocks under $10 with explosive potential. Stay tuned to discover these hidden gems and how they could transform your portfolio. Let's dive in. Number 1. Turkcell İletişim Hizmetleri, AS, ticker TKC. Turkcell, the leading mobile network operator in Turkey, isn't just about voice and data anymore. It's a rapidly evolving digital ecosystem player. With operations extending into Ukraine, Belarus, and northern Cyprus, TKC is strategically diversifying. The company recently reported robust Q2 2025 results, with total revenue climbing 12% year-over-year to 53 billion Turkish lira, and net income surging 37% to 4.4 billion Turkish lira. Analyst Cesar Tyron highlights Turkcell's low leverage and limited foreign exchange exposure, enabling a safe payout of 50% of net income in dividends by 2025, alongside anticipating price hikes in mobile and fiber-to-the-home services as key catalysts. The company's TechFin segment, encompassing Paycell and Financial, saw a 23.1% revenue increase in Q2 2025, significantly outpacing core telecom operations. Paycell particularly saw its mobile money and payments platform revenue jump 35.8%. Furthermore, Turkcell's data center and cloud business experienced a substantial 53.2% year-over-year revenue surge, reflecting its ambition to become a regional data hub with ongoing investments in hyperscale data centers. With an annual dividend of 24 cents per share, translating to a yield of 4.23%, Turkcell offers both growth and income potential, making it an intriguing under $10 play. Number 2. Compañía Paranaense de Energía, ticker ELP. Next, we turn our attention to Compañía Paranaense de Energía, famously known as Copel, a critical integrated utility company in Brazil. In a strategic move to enhance transparency and governance, Copel's board recently approved a plan to simplify its share structure and join the Novo Mercado, a premium segment of Brazil's main stock exchange, known for its stringent operational and disclosure rules. This move alone signals a commitment to higher standards, often attracting more institutional investors. Analyst Gustavo Faria emphasizes Copel's compelling risk profile, citing its positive earnings momentum and a valuation that is currently discounted relative to its peers. There's also significant upside potential stemming from its ongoing privatization process. As the company continues to streamline its operations and focus on core strengths, the market is poised to recognize its true value. For investors seeking exposure to essential services in an emerging market with a clear path to improved corporate governance and financial performance. Number 3. Centrais Elétricas Brasileiras, S.A., ticker EBR. Moving on, we stay in Brazil with Centrais Elétricas Brasileiras, S.A., or Eletrobras, the largest electric generation and transmission company in the nation. Analyst Gustavo Faria notes that Eletrobras's strong financial numbers should instill investor confidence, especially given the anticipated boost from higher Brazilian power prices in the second half of 2025. Eletrobras recently unveiled its Q2 2025 earnings, reporting an adjusted net income surge of 40% year-over-year, reaching Brazilian real $1.4 billion. This performance was underpinned by robust cost control. Significantly, the company distributed an additional Brazilian real $4 billion in dividends, a testament to its reduced risk and improved predictability. Strategically, Eletrobras is boosting investments with plans to deploy Brazilian real $4.5 billion throughout 2025 into M&A, auction opportunities, and critical infrastructure. The company's 2025-plus strategic plan aims to establish it as the most comprehensive renewable energy infrastructure and solutions platform. Furthermore, Eletrobras has strong environmental commitments, with its net zero by 2030 goal and science-based emissions reduction targets approved by the SBTi, underscoring its long-term sustainable growth trajectory. Number 4. Aegon Limited, ticker AEG. Next on our list is Aegon Limited, a Dutch insurance giant offering a wide array of insurance, savings, pension, and investment products globally. Aegon is in the midst of a significant strategic overhaul that analysts like David Barma are applauding. The company has exceeded its 2023 financial commitments and is firmly on track to hit its 2025 targets. Aegon reported a nearly 20% rise in operating profit for the first half of 2025, largely driven by the robust performance of its protection line within the Americas business. Operating capital generation before expenses increased 16% in 2023, with projections for 1.1 billion euros in 2024, heading towards a 1.2 billion euro target in 2025. Its group Solvency II ratio stands strong at 207% in Q1 2024, comfortably exceeding regulatory requirements. Investors should note the optimistic earnings outlook, with expected earnings per share growth of an impressive 126.67% in the coming year, from $0.45 to $1.02, alongside an attractive P/E ratio of 8.02. Shareholder returns are a clear priority, with Aegon recently announcing a semi-annual dividend of $0.1876 per share, yielding 584.0% and completing 76% of a substantial share buyback program. With a sustainable dividend payout ratio of 39.58% and 3 consecutive years of dividend increases, Aegon presents a compelling case for income-focused investors. Number 5. Banco Bradesco S.A. Ticker BBD. Shifting back to Brazil, we highlight Banco Bradesco S.A., another one of the nation's largest banks. After underperforming in 2024, Bradesco shares have staged a sharp recovery in 2025, gaining approximately 51% year-to-date. Analyst Mario Pieri suggests that the latest data from the Brazilian central bank points to significant upside potential for Bradesco, particularly if it successfully executes its turnaround strategy as interest rates begin to drop. As the bank's profitability normalizes, Pieri anticipates the stock's earnings multiple will expand back towards historical levels. The stock has shown strong momentum, reaching new 52-week highs, with shares trading as high as $3.26. Analyst sentiment is leaning towards optimism, with recent upgrades from hold to buy by prominent firms like Citigroup and Goldman Sachs. Banco Bradesco delivered robust results for the second quarter of 2025, reporting a recurring net income of 6.1 billion Brazilian reais and strong total revenue growth, meeting consensus EPS estimates of 10 cents. A significant strategic development involves its partnership with Rede D'Or São Luís S.A. Group, expanding its presence in the healthcare value chain, which alone contributed to a nearly 9.06% surge in BBD shares. Number 6. Mizuho Financial Group Incorporated, ticker MFG. Next, we head to Japan for Mizuho Financial Group Incorporated, one of Japan's preeminent financial services companies. Analyst Shinichiro Nakamura highlights Mizuho's robust core business performance in 2025, including an impressive 30% growth in net interest income and 9% growth in fee income in the most recent quarter. Nakamura believes Mizuho's stock price is poised for continued outperformance, driven by additional profit upside, an attractive valuation, and significant share buyback potential. Mizuho also retained its A1 rating with an improved outlook on profitability, reinforcing its financial stability. JP Morgan maintains a buy rating on the stock, reflecting positive sentiment. The bank has raised its 2025 guidance, projecting earnings to grow by 16.67% in the coming year, from $0.42 to $0.49 per share. With a price-to-earnings ratio of 13.73, a favorable price-to-earnings growth ratio of 0.80, and a meaningful dividend yield of 2.33%, supported by a sustainable payout ratio of 31.25%, Mizuho presents a compelling value proposition under $10 for investors seeking stability and growth in a global financial powerhouse. Number 7. Itau Unibanco, Holding S.A., ticker ITUB. Finally, we return to Brazil for Itau Unibanco, Holding S.A. Itau has proven its resilience and strategic agility, successfully navigating a difficult market to report 10 consecutive quarters of net interest growth. Analyst Mario Pieri points to Itau Unibanco's industry-leading CET1 capital ratio, suggesting substantial additional capital distribution potential. The bank reported a recurring managerial net income of 11.5 billion reais in Q2 2025, marking a 14.3% year-over-year increase, with an impressive return on equity of 23.3%. Management has also raised its guidance for financial margin with clients to a range of 11.0% to 14.0%. The bank aims to transition approximately 15 million clients to its unified super app by the end of 2025, supported by a 17,000-strong technology workforce, including 8,000 generative AI-trained developers. In terms of shareholder returns, Itau recently announced a 9.0% increase in its monthly dividend and declared an extraordinary dividend payout of Brazilian real $15 billion, alongside Brazilian real $3 billion in share buybacks for 2025. The bank is also a leader in ESG initiatives, targeting Brazilian real $1 trillion in sustainable financing by 2030. Analyst sentiment remains largely positive, with a consensus buy rating and price targets suggesting significant upside potential. Now, let's bring it all together and glance at the numbers side by side. Itau Unibanco, with a staggering $63 billion in revenue and a $39 billion market cap, leads the pack, boasting a solid 0.70 earnings per share and a 1.2% dividend yield, proving its dominance. Mizuho Financial, not far behind, commands an $82 billion market cap and $58 billion in revenue, offering a higher 2.9% dividend yield and a respectable $0.47 EPS, reflecting its stable Japanese banking operations. Banco Bradesco, while smaller in market cap at $18 billion, still pulls in $56 billion in revenue, with a 0.34 earnings per share, indicating its impressive operational leverage within the Brazilian market. Moving to the insurance sector, Aegon stands out with a $12 billion market cap and $32 billion in revenue. Its impressive 5.7% dividend yield is the highest on our list, making it an income investor's dream, complemented by a strong $0.91 EPS. This is a company returning serious value to shareholders. For the utilities and telecom plays, we see more traditional gross margins. Eletrobras, with a $18 billion market cap and $7 billion in revenue, shows a healthy 44.56% gross margin and a 3.5% dividend yield, backed by a $0.52 EPS. This highlights the efficiency of its generation and transmission assets. Copel, at a $4 billion market cap and $4 billion in revenue, has a 21.51% gross margin and a $0.72 EPS, demonstrating its stable utility operations and potential upside from privatization. Finally, Turkcell, our top pick, with a $5 billion market cap and $5 billion in revenue, exhibits a strong 26.97% gross margin and a compelling 5.4% dividend yield, coupled with a $0.51 earnings per share. Each of these under $10 stocks presents a unique blend of value, growth, and income potential, making them truly compelling for savvy investors. So, these 7 compelling stocks trading under $10, each with unique catalysts and significant upside potential. Which of these under $10 gems do you think has the best shot at delivering massive returns, and why? Drop your thoughts in the comments section below. And if you're looking for even more high-potential opportunities, don't miss our video right here on 7 best semiconductor stocks to buy in 2025.